We're jumping straight into Redwire today. Everyone is watching the price action. But the real story is the massive pivot from experimental R&D to industrial scale production in space and defense.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we unpack this massive shift, make sure you are subscribed and hit that like button so you don't miss out on the next breakdown.
So yeah, we have to talk about the volatility. I mean, Redwire has been on an absolute tear recently.
It really has. We're seeing a rally of, roughly 50% lately, finally breaking out from those previous lows that had investors, frustrated for a long time.
Yeah.
It feels like the market suddenly woke up and realized this isn't just a science project anymore. But honestly, for the casual observer, a 50% jump in a short window feels a bit manic? Is this just meme stock energy, or is there something solid under the hood?
That's a key question, right? And if you look at the data, the market is reacting to a very specific set of numbers, not just hype. We're looking at a structural change in their financials.
Okay.
In the third quarter alone, they posted 50.7% year-over-year revenue growth. That is not a small uptick. That's a changing of the guard.
50% growth is serious, but growth can be empty if it's just one-off contracts. Where is this actually coming from?
It's coming from a strategic shift toward European defense and what they call space infrastructure. And this isn't just them selling more widgets, it's about who is buying them.
Okay, let's unpack this for a second, because when people hear space stock, they usually think of rockets. They think of SpaceX, they think of launch pads, fire, and smoke. But that is not Redwire, right?
No.
Not at all.
Redwire doesn't launch the rockets. They don't care who wins the launch race, SpaceX, Blue Origin, whoever.
So the simplest way to think about Redwire is as a picks and shovels play.
Precisely. They aren't the ones digging for gold. They're selling the shovels to the miners.
Right.
Or in this case, they are making the solar arrays that power the station, the docking systems that let ships connect, and the antennas that send the data back. If you launch a satellite, it's just a metal box until Redwire puts the technology on it to make it function.
And right now, business seems to be booming, but I want to drill down into that revenue number you mentioned earlier. $103 million in the recent quarter. That's a big number, but inside that report, there was this phrase, the European explosion. What exactly is happening across the Atlantic?
This is a huge part of the narrative shift, and I don't think the market fully appreciated it until now. For a long time, these space companies were very U.S.-centric. You relied on NASA, maybe the Space Force.
Sure.
But Redwire's European revenue grew by 117%.
117%. That's doubling and then some.
Yes. And get this, European revenue now makes up over half of their total sales. They've effectively become a major European defense contractor overnight.
Okay, but why? Is Redwire just that good at sales, or is there a macro trend pushing this?
Well, think about the timing. We have a ground war in Europe for the first time in decades. NATO nations aren't just updating tanks and artillery. They are realizing their eyes in the sky are outdated. They need space dominance, and they need it yesterday.
So this isn't just Redwire being clever. They are surfing a massive geopolitical wave.
Exactly. European sovereignty is the buzzword right now. They don't want to rely 100% on U.S. assets anymore.
Ah, okay.
Now, Redwire bought a company called Space Envy a while back, which gave them a local footprint in Europe. So when the European Space Agency or European Defense Ministry spend money, Redwire counts as a local vendor.
That's a Trojan horse strategy. They're an American company wearing a European badge to capture that defense budget surge.
Precisely. And that insulates them. If the U.S. budget stalls, which we know it does often given the state of Congress, the European faucet is still running wide open.
That is a massive diversification. And it brings us to the concept of the moat, because usually when we talk about space hardware, I worry about commoditization. Can't anyone build a solar panel? Why is this revenue sticky?
It is incredibly sticky because of the engineering stakes. Think about the nature of these deals. Once you design the power system for a space station, they can't just switch vendors halfway through. It's too integrated.
Right. It's not like changing a light bulb.
Take the next spacecraft docking deal. This is an 8-figure deal. They are building the mechanisms that allow spacecraft to park and connect.
Parking in space. That sounds simple, almost mundane, like pulling a Camry into a garage.
It sounds simple, but think about the physics. We are talking about two metal objects moving at 17,000 miles per hour in a vacuum.
Okay, put that way, it sounds terrifying.
It is terrifying. They have to connect with millimeter precision. If you are off by an inch or if the latch doesn't engage perfectly, you don't just scratch the bumper. You potentially depressurize the station, rip a solar wing off, or destroy the mission entirely.
So this isn't just a metal clamp you buy at Home Depot.
It's extremely complex sensing, robotics, and dampening mechanics. That's why we call it a moat. If you are NASA or the European Space Agency, are you going to buy the discount docking port from a startup to save a few bucks?
Absolutely not. You buy the one you know works, the one with flight heritage.
Exactly. Redwire has the heritage. They're becoming the USB port of space. Standardized, reliable, and everywhere. Once you're the standard, it is incredibly hard to displace you.
And it's not just parking spots. They are involved in the ESA Syndio 3 mission payload integration, and of course the big one, NASA Gateway.
The Lunar Space Station.
Right. Redwire is providing the rollout solar arrays, or RSAs, for the Lunar Space Station. And just to give everyone a sense of scale here, because solar array sounds like something on your roof, describe what these actually look like.
These are monsters. When fully deployed, they are roughly the size of a football end zone. But the magic is that they roll up like a carpet into a surprisingly small tube for launch. They unfurl autonomously in space using the stored energy in the booms. It's incredible tech because it solves the biggest problem in space travel, volume constraints inside the rocket.
So you have the USB port for docking and the power plant that rolls up like a yoga mat. But here's where I get a little confused on the strategy. Because space is cool, but Redwire has made a very aggressive pivot down to the atmosphere with the acquisition of edge autonomy.
This is where the story gets really interesting.
To me, it feels like a lack of focus. They are the picks and shovels of space. And suddenly they are buying a drone company. It's like a pizza shop suddenly deciding to sell tires. Why does a space company want to be in the drone business?
It looks that way on the surface, but you have to look at the data flow. Modern warfare is about the kill chain.
The kill chain.
Speed. It's about how fast you can spot a threat, track it, and neutralize it. Satellites in orbit spot the target broadly, but they are moving fast and are hundreds of miles up. They hand that data down to the stalker drone, loitering in the atmosphere, which tracks it in real time with high-resolution cameras.
I see. So the satellite says, there is something in that grid square, and the drone goes over and says it's a T-90 tank, and here are the coordinates.
Exactly. And Redwire now owns both ends of that conversation. By acquiring edge autonomy, they moved from just space into defense and specifically uncrewed aerial systems. We are talking about the Stalker and Penguin drones.
Stalker and Penguin, I love the names. But these aren't toys.
Far from it. The Penguin, specifically, holds records for endurance. These are serious pieces of hardware used for intelligence, surveillance, and reconnaissance.
Right.
And this connects to some of the speculation driving the stock price. The Golden Dome.
The Golden Dome. It sounds like a generic action movie title. What is the actual rumor here?
It's speculation linking Redwire's technology to missile defense initiatives in the Arctic and Greenland, as well as broader NATO border security.
So, looking at protecting the northern flank.
Exactly. If you need to monitor the Arctic or huge stretches of NATO borders, you need persistent surveillance. That means satellites in space and long-endurance drones in the air. Redwire now does both. It's a vertical integration of surveillance.
So, you have the picks and shovels in space and the eyes in the sky for defense. That's a compelling story, and it seems like I'm not the only one who thinks so. You mentioned insider buying earlier.
I did. The CEO, Peter Canito, he recently went into the open market and bought approximately 32,000 shares with his own money.
That is always a strong signal. Executives get paid in stock all the time, but when the boss reaches into his own pocket to buy shares at the market price, it usually signals they think the stock is undervalued.
It's a vote of confidence. It says, I know what's coming in the next 12 months, and I want a bigger piece of it.
So we have huge revenue growth, sticky contracts, a defense pivot, and the CEO buying shares. It sounds perfect, but...
Here. Hold on. I want to stick on the financials for a second, because you painted a rosy picture with the CEO buying. But if I'm a regular investor and I look at the bottom line, it's red ink.
There is always a but.
There's a big but here.
Yeah.
Despite all this growth, are they actually making money?
That is the profitability problem. And it is the single biggest risk here. Despite that huge revenue growth we just talked about, the company is not profitable yet.
What are the actual numbers?
In the recent quarter, they posted a net loss of over $41 million. If you look at the trailing 12 months, the net loss is over $260 million.
$260 million. I don't care how cool the drones are. That is a lot of cash going out the door. How long until the bank account hits zero?
That's the unspoken anxiety here. We call it the cash runway. When you are burning cash to grow building factories, developing new drones, integrating acquisitions, you eventually need to refill the bank account.
And that usually means financing, right? There is a real risk they might need to raise more money in 2026. And if they choose to do that by issuing more stock, that means dilution.
Let's break that down simply. Dilution is like watering down a drink. If you own a piece of the pie and they slice the pie into a million more pieces to sell to other people to pay the bills, your slice gets smaller.
Exactly. Existing shares get watered down, and right now their profit margins are negative because they're reinvesting so heavily.
Into what?
They are pouring money into things like the SabreSat orbital drone and expanding manufacturing capacity. They are betting that scale will eventually bring profit.
They are betting that once the factory is built, the second drone is cheap to make.
Correct. But right now, they are still paying for the factory.
And while the CEO is buying, not everyone is staying put. This is the part that makes me nervous. We talked about smart money earlier.
We did. We have to look at AE Industrial Partners. They are a major shareholder, a private equity firm that knows this industry inside and out.
And they sold.
They sold a massive block, over 14 million shares.
That is worth roughly $150 million.
Roughly, yes.
So I have to ask the question. If the future is so bright, if the Golden Dome is coming, if Europe is exploding, why is this major investor cashing out $150 million worth of stock?
It's the counter-argument to the CEO buying.
Yeah.
Now, to be fair, private equity firms have a life cycle. They eventually have to sell to return money to their own investors. Doesn't always mean they hate the stock.
Good for the timing.
But selling that much volume that quickly,
Yeah.
it definitely raises an eyebrow.
It suggests they might think the recent rally was a good time to take chips off the table. It's a classic signal conflict. The CEO says buy. The major investor says sell.
Yep.
And then there is the government aspect. You mentioned these contracts are sticky, but they are also government contracts.
Slow. That is the word. Government contracts are great for stability, but terrible for speed.
We're seeing headlines about budget delays and potential shutdowns constantly.
That is the execution risk. A government shutdown, or even just a delay in passing the defense budget, can push revenue to the right. It doesn't mean the money disappears, but if you were counting on that cash in Q1 to keep the lights on and it doesn't come until Q3, that cash burn problem we talked about gets a lot scarier.
Right. Your expenses don't stop just because Congress is arguing. You still have to pay the engineers building the drones.
Exactly.
So for the listener trying to weigh the 50% growth against the $260 million loss, what should they be watching? Let's look at the roadmap for the next few months. First up, earnings.
Expected in March 2026. This is going to be the prove-it moment. We need to see if those European sales are a one-time spike or a sustained trend. If that growth slows down, the bull case takes a hit.
And we need to keep an eye on this Otter program I keep reading about. What is that?
The DARPA Otter program. This is a $44 million contract involving very low Earth orbit technology, or VLEO.
VLEO. That's satellites flying really, really low. Why is that special?
Because the physics are a nightmare. At that altitude, the atmosphere is just thick enough to cause drag. He wants to pull the satellite down and burn it up. You need constant propulsion just to stay in orbit.
It's like trying to swim upstream constantly.
Exactly. But the advantage is massive. Because you are closer to the ground, your sensors get much higher resolution and your signal latency is lower. If Redwire succeeds with their SabreSat tech here, which uses the air itself for propulsion, it validates their proprietary tech. It proves they have a secret sauce that no one else has.
And then, of course, the Golden Dome rumors.
This is the wild card. Watch for any confirmation on Arctic defense contracts or NATO missile defense integration. Right now, it is speculative. But if a press release drops saying Redwire is officially part of the Arctic Shield, that would be a massive revenue unlock.
And finally, the technicals. I mentioned earlier that the stock broke out.
It broke resistance levels around $8.40 to $11. The market is watching to see if it can hold these new highs. When a stock rallies 50% this fast, you often see profit taking. Traders who bought at the bottom might want to sell. If the stock can hold these levels despite that selling pressure, it shows real strength.
So let's bring it home. Summarize the trade-off for us.
You have a company that is growing at 50%. They have a massive backlog of $355 million in signed contracts. They have unique tech in space and drones that fits perfectly into the modern kill chain.
But on the flip side, you have to stomach the cash burn. You have to accept the fact that they are losing money on every dollar of revenue right now because they are building for the future.
It is the classic growth versus profit battle. If they can turn that revenue into profit before they run out of cash, this could be huge. If they stumble, that dilution risk becomes very real. They are trying to grow into their valuation before the clock runs out.
Well, thanks for simplifying the madness with us.
Always a pleasure to dig into the details.
That is the lowdown on Redwire. Keep your eyes on that March earnings report. It's going to be a wild ride. Make sure you subscribe and drop a comment below on whether you think the Golden Dome is real or just a rumor. We'll see you next time on the Easy Money Show.